Good morning, ladies and gentlemen, everybody. Welcome back to another day in the market. Happy to have everyone in stream, even though there's nobody here yet. Hopefully today is a great day. Hopefully all of you have a great day. And we'll just analyze the market as we normally do and hopefully help everybody stay on the right side of the trend and even the small moves. So, we'll get into it here in just a little bit as some people kind of stroll in. For the moment, though, I think I am going to go get myself a coffee. So I will be right back, and I will put that on the screen. So, see you in a sec. Oh, shoot, I didn't even unmute myself. There we go. Alrighty, so yes, market is positive. Sorry, no, it's negative. Sorry, I've been working pretty hard the past few days and had some late nights, and so I can already feel my brain is not moving as fast as it normally does. So today is going to be a relatively, It's going to be taking it kind of lax today because I can just feel I'm not firing perfectly, but we'll be fine. So yeah, the market is obviously negative. It's below 30-minute trend on pre-market systems. It's below 30-minute trend on regular trading hour systems. So we'll just go through the typical market analysis here real fast, which is pretty much that market is downsided below the 50 SMA until it's not. So we're either in a breakdown or we're going to be going through a counter trend bounce back to 680, 730 at some point or another, right? That's not what we can control to a degree. It's just in general, right? Whenever the market wants, whenever it bounces, whenever reverse, we're going to go back to the 50 SMA. It's guaranteed. Always happens. Some fashion or another. All right. So that's already in the back of our mind for the day that comes that we actually bounce the market and reset the 50 SMA. That's already a trade. It's just in the future. All right. So right now it's about, are we going to continue working the markets down? Just in general, right? Whether we bounce markets a little bit for the day, then roll it down, whether we do breakdowns immediately, doesn't matter. First thoughts are we're in a lower low, lower high market until proven otherwise. So we're in a lower low, a lower high market, seeking out liquidity on the downside until liquidity is strong enough that it creates a big enough support, and then we reverse the market back to the 50 SMA. That's all we're doing right now. We're in a downside, you could call it a downside regime, right? A downside bearish market, downsided market. And that's literally, and it functions the same way every single time, which is that markets go down for as long as it takes until we find enough support, at which point we bounce the market and then rally it back to the 50 SMA in the hopes that it then goes into an uptrend. So that's what we're doing. If we look at some fib stuff here on the left, I mean, we can go through some of this. This is, there's quite a bit there, but we can run through it. So on the, wait, what is that? That is, oh, that's right. This one has 2, but yeah. So right now we're coming into some older monthly Fibonacci levels. We broke down a decent one today, the 100 fib here on the NASDAQ and through the after hour session. So that's a kind of a big fib that we're going through. That means we're kind of getting through the low of a previous month's trading action on NASDAQ or the NASDAQ, right? So in theory, not in theory, in actuality, the NASDAQ market is currently this morning priced below previous month's low in this pre-market session. Right, so if the monthly chart on the NASDAQ wanted to get acceptance below, previous month's low, which it already did, right, when we would go down to the next target here, 2004.8. So, but anyways, so there is the possibility that the NASDAQ is getting weakness as it relates to some longer term monthly stuff. Does that come to fruition and we roll the markets into something more serious? Time will tell, always does. One thing's for certain, the market is in fact below the 50 SMA this morning. So short-term markets have transitioned bearish. Whether the short-term takes us into a larger bearish move is always kind of the question. So yeah, I mean, that's literally the market in a nutshell. There isn't, there's a lot to it. There's a lot more to it than that. But good morning, Mike. How are you? Good morning. Yeah, I mean, there's a lot more to it than me just hitting on a computer screen and saying that the market's below the 50 SMA. But to a degree, I mean, that is kind of it. And now there's a lot of different trades all throughout the day, and there's a lot of different ways the market will move as the market just goes through its game, right? Which is just basically going through short-term trades, long-term levels, et cetera, et cetera, et cetera. And any sort of pattern and dip and pullback and formation can set up at any point. But we know for right now that we're not in a buy program. If anything, we're in a selling program as it relates to the overnight session. So let me bring up, let's go to here onto this guy. extended trading hours. So right there, that yellow line on my chart, that's the 30-minute 50 SMA, right? So just so yesterday, right? Yesterday was the pullback to the 50 SMA. Then, excuse me, so it was a pullback to the 50 SMA. Then we bounced it, recovered it, recover it. I even did a small little day trade that I posted a YouTube video about here where it's a 1-minute VWAP strategy. You can long on the top there. Long story short, throughout the overnight session, bearish, and now into the pre-market, we have broken down the 50 SMA. So the market is now, as far as it relates to that SMA, would be bearish, right? So until we're reclaiming that SMA, we're not going to see a meaningful market structure change within the 30-minute. Now, if you want to get into kind of patterns, you can even see how the market's now formed up, what kind of looks like this kind of funky-ish head and shoulders, and we've used the 50 SMA rollover as the breakdown spot. So, markets are downsided. Whenever we break down the 30-minute, as we've done here in this pre-market trading session, the market naturally wants to trade down to the 1 hour if the 1 hour is priced below. So double checking my work here this morning, we have the 1 hour 50 SMA priced at 68664. So this morning, not only did the 30-minute 50 SMA transition bearish, but also the 1 hour. And they were both priced at a very close. We'll just say they were priced at the same point, even though they weren't. But as far as it relates to a stock chart in a couple, 30, 40 cents, they're basically in the same spot. So you have two algorithms. When I say algorithms, I mean, we just call it that because, it gets people's attention and people think, that it's cooler than, an SMA calculation. But programs and computers and liquidity and all that good jam, is located there. And we took down a 1 hour and we took down a 30-minute, both pretty much at the same time. So a way to think about that is, say there is a portion of the population that only uses a 30-minute, well, then they would be bearish, right? Because it broke down. And now they'll say there's a portion of the population that only uses a 1 hour. And if the 1 hour breaks down, then they're bearish, right? And let's say that these two groups don't use both of the moving averages. Nonetheless, you still have two groups of people that are going bearish for the same reason, but two different moving average calculations priced at about the same spot. Now, one would assume that anybody that follows a 30-minute on a regular trading hours chart may arguably follow a 1 hour, just like we're discussing here. So that's a point, that's like an educational bit for you to emphasize, right? That not everybody looks at everything all at once. Some people like one thing over another. So, some people might use a 10 SMA, some people might use an hourly chart, some people might, whatever, right? But, bottom line, there were two moving averages there, and the people that use those moving averages, it's like a double breakdown, right? You're getting a 1 hour and a 50. Now, does that dictate that the breakdown's going to go further for longer? Not necessarily. It just basically means there's 2 points of interest there that lined up at the same moment. So this is not a situation where we're breaking a 30-minute down and then we're going to take the market down to a 1 hour trend, because the 1 hour is priced right at the 30-minute too. So normally we would look to break the 30-minute down and then sell it down to a 1 hour 50 SMA, which is, so yes. Anyways, that's not the trade we have at hand here. The trade we have at hand is that both of them have broken down at the same time. So interesting, right? It's kind of like a double sell there, if you ask me. So either way, as the story always goes, we will follow some top-down 30-minute volume-weighted average prices, which basically is meaning VIX target 22, then relax to 20. Morning traders, Walt, bonjour, Sam. VIX is targeting. I haven't even gotten to the VIX here yet this morning, to be honest. was actually setting up some charts, doing a little reading, doing a little thinking. And yeah, so here we are. But so yeah, right now, just general thoughts again are just kind of like bearish. And the volatility index I haven't looked. I'm looking at it now. I'll move my microphone a sec. Can't see my chart. It's in the way. Yeah, I've been doing a lot of different studying and work in the past couple days, and I kind of screwed up all my charts and just like haven't gotten back to organizing them the way I like when I'm sitting through the trading day. And they were kind of like that the last stream. That's why I was like, if I'm ever kind of like off, it's usually because the previous day I was testing out a bunch of new stuff and I may have goofed my charts up. So I'm always kind of like evolving and like trying to set stuff up a little bit of a different way. And so sometimes I'm like kind of doing that at the same time as we're on stream. So yeah, obviously the VIX broke out because the market's down. I mean, I already kind of knew that, but it's just more or less figuring out where the exact levels are at. Kind of like green better than red. I don't know why I've been using red for so long. Anyways, let me pull this down. So the VIX volatility market has rebroken out at $30 or $30, sorry, about 19.6. Wait, and you said, what did you say? Brandon got locked out of his YouTube and Google accounts. Interesting. One sec, guys. Hold on, sorry, guys. All right, yeah, sorry, back to what we're doing. So yeah, the VIX is broken out over 30, so obviously VIX is elevated, markets are going down. Let's double check because the VIX works the same way as the market. So when the VIX breaks out the 30-minute, it's going to go to the 1 hour. But as we can see, the 1 hour is basically priced the same as the VIX here this morning. So again, that breakout's already occurred. And who just said 22? VIX 22. Do we have a gap up there? Remember we talked about the VIX the other day, and we do got a gap somewhere up there. You're saying 22. Hold on, I got to go back quite a bit for this one. As I said, I was kind of doing a bunch of stuff on my charts the other day and kind of like deleted a bunch of stuff, as I always do. I always find myself having to do this stuff over, unfortunately. Is it this one? It might be this one. I think that's the guy. Right there, 2280. That one's the 20. No, I think that was the one. Yeah. All right. So, yeah, that would be up to 2280 is that 5-minute gap. So, best case scenario. When I say best case scenario, it's like, you know, if the market really drowns out, you know, and goes for a sell-off, that can be a magnet up there. So just kind of things of confluence, right? If the VIX wanted to keep running, that could be an area where the market wants to fill up on the VIX up to $22.70, give or take. You know, so right now we'll just basically put it. We're going to be looking for some just continued bearish setups, continued bearish trades. Oversold bounces, oversold bouncing. So yeah, I mean that's pretty much it. We're looking for lower low, lower highs down, oversold bounces until the regime changes back to a bullish market. So whatever sort of strategies and things that you guys like to use on the day to help you in that way, that's what I would say you want to do. Or think about. Maybe not do, but think about. Yeah. Nice bullish pop there. Again, looks like a count. Well, I know it's a counter pop. Could be looking back up as high as that 30-minute volume weighted average price, arguably. That's up for debate. NQ just basically pushed back into 61.8 fib there, so on and so forth. So yeah, the things that we have on the bottom charts here, on the bottom that I'm kind of working with here, these are weekly levels. And is this? Yeah, that one's yeah weeklies. So the two tops are monthlies. The bottoms are weeklies, etc. Weekly fibs. I don't want to overlap my dailies on that, but I'll do my dailies differently. So yeah, give me a second. I actually want to reset that one up. Yeah, like I said, I'm not even really totally prepared for this market open. There's a couple other things I still got to set up. Like I said, I was doing a lot of... Oh, wait. Did that just delete off there? Control Z. I see. But wait. Yeah, that's annoying. I have to do completely different. Yeah, whatever. Guess I can do that. Yeah, sorry, I gotta get some stuff set up over here. Like I said, you're just looking for some oversold bounces, right, to lower highs, things like that. 50 SMAs priced all the way back there, so if we don't just go into a straight up breakdown, then that's where the market's going to be attracted to going back to. SPY. Let me just double check one more thing. GSO Pete's, PDW, so that's the 1 hour, and then that would, is that the 1 hour? No, I don't even know why I put that there. Oh, I know why. Yeah, that makes sense. Here we go. Again, right now you got to be cautious of the market squeezing back to the top down 30-minute volume weighted average price of the market. Right now, NQ's above 24,875. You know, right now the ES on the weekly is above its 50% fib, etc. Again, market could arguably be moving its way back towards top-down 30-minute levels. Yeah, like I said, I'm still missing some stuff I gotta add to my chart here, so I'm kind of missing a little bit of information that I would like to have for the moment, but I still think the market could arguably work its way up there. It's still a bearish market, obviously being below the 30-minute. It's just counter trend pops to lower highs for the moment is, again, what we're seeking out.
so we've already retraced the GP then. Is what it look like? Oh, dang it. I want to get something else going. That's right. SPY. Yeah, apologize. I'm setting up another chart here. I'm always setting something up, but yeah. I'll get to talking and giving you guys some good stuff in a sec. I just gotta finish doing this. Okay, those are good. Okay, all right, charts back set up the way I'd like it to see it, kind of. Still got a lot of stuff that's not how I would particularly like it, but that's okay. Yeah, I'm basically doing a bunch of setting up stuff still right now. Again, a lot of different changes going on with some of these charts. Yeah, I just Crypto P. I just sent him a message. I haven't heard anything yet, but you know. Okay. We're close. We're close. Not quite there yet. Yeah, so, I mean, pretty much for some fib stuff, the story would go until you're back over. Yeah, you're back over this 23.6 fib. You're not really looking too much up there. Oh, damn. Why is my computer stupid? You gotta love it when it does that. Yeah, I mean, currently right now it would appear that, NASDAQ, SPY, and couple others or whatever, just holding too much support for the market to really break down in this exact moment. Again, just trying to get all my stuff organized the way I'd like. Again, we're still below the 50 SMA. Volatility is obviously upsided, so we're not super long in that regard. It's just counter trend bouncing. Again, market is still holding too much a support. And right now we're into the weekly 50 SMA on the ES, so we'd have to break down the weekly to go down. Again, still just seems like too much support. Now, ultimately, if the market does end up breaking up here, should see QQQ up towards like 605, 65. I mean, we're really just going to be going up to the next little level up. So there's not a ton of room there till the next ES monthly again. 68654 is another big monthly level there on the ES. So there's just quite a few things here. You know, to really be taking the markets up super long, we would have to be breaking out the monthly here on the ES, right? So that's not taking place yet. So that's basically a monthly 23.6% fib breakdown, if you will, on the ES. Excuse me. You know, I could explain stuff for days, you know, but like I said, you know, until ES gets over 68654, you shouldn't see the weekly monthly futures market transition up. Again, volatility still up. You know, so VIX is up, market's down, counter trend bouncing below monthly resistance on the ES. Yeah. That was another thing. I gotta change that guy to blue. That's why another thing, it's like I don't have them all properly set the exact way I'd like. But anyways. So yes, good morning everyone. Sorry that I'm kind of lame right now. I'm getting all these things set up and just kind of rambling. But you know, yeah, I mean, the more you guys hang in the stream, the less I'll have to talk. You'll just kind of know what's going on. All right, so with the ES here on the 1 minute, we're getting some signals that the market's trying to price itself down a little bit based off of the 1 minutes. All right, so the 1 minutes have unfilled GPs, so they either have to take energy, well, they either have to move markets down too, or they have to retrace. So, you know, those are some things that I'm thinking about the 1 minute markets here. I really need to open up another chart. But whatever, that's fine. Let me double check the 5 minute here on the ES. See, that's the thing, is I need to have another 5 minute up and another 1 minute, you know, to properly analyze all these markets in real time effectively the way I'd like. But anyways. All right, so there's the move down, right? Again, we're getting resistance on the ES monthly. We've now gone 161, and let's just double check the NASDAQ here. The NASDAQ has 3 no GPs in a row. Okay, so what we're gonna do is we're gonna take the top one here. That's the 261, so that's still doing 261. Gotcha. So we're just gonna basically call those guys 3 white soldiers down. Well, that'd be 3 reds, or maybe 3 crows, what are we gonna call that? So yeah, again, just downsided here. Now we are coming into the next weekly fib here for the ES, so if there is a temporary hold here, we could see some support there. Again, take everything I'm saying with a slight grain of salt, because any level could be used at any time. It's about finding the inflection point and pain point and super amount of confluence for everything. So like right now we're getting a 261 into a 38.2 off this high. It's not bad. I like to see 1 minutes into the 423s, but again, this could be a little area of temporary bouncing, because again, as we just said, all of those reasons. You have a 261 line up with the 38.2 weekly, so that's a little bit of confluence there on that market, you know, so you're having, you know, arguably
micrograms or shorts from the top of this market on that unfilled candle coming into a 261 extension while we're simultaneously lining that up with a weekly 38.2. That's an inflection point of Fibonacci. So that's a scalp long. Yeah, I don't even know how to explain it. Brandon's systems on top of all of my systems just, I want to say, instantly started clicking. It was, I don't even know how to explain it. It was kind of weird. But yeah, all the Brandon systems that he's taught over the years and kind of helped me, learn that they never quite clicked. He still knows far more than me, obviously. But then layering that on top of mine, maybe that's why, because I was meshing both for so long. But I feel like over the past couple days, honestly, past couple days, I feel like they're becoming like really, really clear. But yeah, anyways, so I've been trying to set up all my charts all the ways that I want for every system that I use, so I can objectively pinpoint every single spot of this market to a degree. So anyways, yeah, so we're just doing a little bit of a 38.2 ES bounce here, maybe using some confluence off the highs 261. Again, there's basically, at this point you'll see me throw around a bunch of fibs and a bunch of VWAPs and a bunch of stuff, and it basically will be impossible for me to teach it to you in real time while trading it, while showing it, right? At the end of the day, it's kind of like you're just going to have to take my word for it on some of these things, because I just won't be able to do it all effectively in real time like that, so. Yeah, so we're really just doing a little bit of a 38.2 bounce. That's a good little target there for that bounce because you've basically just cleared out all of the imbalances on the 1 minute while simultaneously bringing the ES market back up to its next weekly level. So you've effectively done the liquidity grab from one fib to the next fib as it relates to the ES weekly, right? So that sort of liquidity system done. That one, right? Now it doesn't mean markets wouldn't go higher and all these things, right? It's just this, it's part of a system, right? So that's right there was a fib system, so that bounce that just took place was a Fibonacci weekly bounce, but it's taking place while the market is still in a negative regime, right? So it doesn't mean that bounce has to last for forever, right? That's a Fibonacci cycle that we can see, but it's currently within a negative selling regime, right? So, yeah, all that information, whatever you want to do with that. So, yeah, I mean, I really would like to take a second. So if you guys just want to chill, I guess you guys are already chilling, but I really need to set up another chart, I think, to effectively manage the lower time frames without making my charts too busy where I even slightly confuse myself. So I'm going to do that because what you're seeing here is I'm already overlaying this NQ stuff on my monthly chart, and that's going to screw up my visualization of my monthly levels a bit. So I do need to get a little bit more organized here if I really want to give the goods. So I'm going to go ahead and do that real quick. So what do I really need here? I have a monthly, daily, weekly. I mean, honestly, you need the 4 hour, you need the 30, I mean, you need them all. But to really, really, really see it. But I guess I'll just go down to, well, I could just do, could set up another 1.5. I mean, that's fine. But for the moment, looking at NQ here, this was that NQ monthly breakdown, right? So the back test of that monthly is going to be to 24,970 or so. Now, how it gets there is just dependent, right? Because obviously the market is going to cycle through other fibs and it will cycle through other volume weighted average prices and so on and so forth. But
ultimately, we at this point could be seeing NQ up to 24,790s, give or take. That's possible. Again, there's always levels that have to break, but I'm just saying, right? So based off the monthly. So on the monthly scale for the NQ, right, we sold off the monthly. So this purple line is the previous month, right? So the previous month's fib breakdown here transitions to the previous month's fib, find support, bounce to back test previous month fib breakdown, right? So, this is still, I don't want to say it's unconfirmed because you did break it down here and then you kind of back tested it, but you also went over, right? You went over it again and then you broke down. And there's no corrective back test, so arguably on deck. And yeah, so, those are thoughts that I'm having. 6848. Oh, so you're looking at ES there, 6848, which would be somewhere there. Oh, I can't even do, well, that's fine. Do 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 do. So yeah, that's pretty much that. Anyways, I'm gonna set up a couple other things here, and we'll go from there. Yeah, so VIX is still elevated. VVIX is also up, so that tells me that there is some degree of hedging of downside risk, but obviously because the market is negative. So like, what would you expect in that case, right? So yeah. We have yet to retrace the golden pocket of yesterday either, so arguably daily charts are working towards golden pocket resets of previous day. I mean, there's all sorts of things that, our markets can arguably try to do. Again, like I said, everything for the moment is counter trend trading because obviously we're below that 30-minute. So do keep that in mind. Dang it, that's annoying. Can't you just... Oh, I guess I could do that. Hello, computer. Thank you. Alright, sorry about that. Just finally getting some things set up. Read both line SPX, SPX. Yeah, I mean, I don't know enough of your system to be able to effectively map that off for the moment. Yeah, so pretty much, the way it would sit on this guy, monthlies breakdown, monthly shies. Yeah, I guess you could say I'm just undecided on exactly what. I got a lot of different levels in the moment. I could see a couple different trades. I can always scalp something. I mean, at the end of the day, there's a million different things to always do. Right now, again, like I said, we're not on like swing longs because obviously market is more downside than anything. Right now, the S&P 500 or the SPY doesn't really have super bearish selling on momentum right now. Doesn't mean these things can't change. 1 minute momentum is not really strong either. Kind of down. Yeah, I mean, I'm just trying to think, trying to get into the zone. I'm not quite in the zone. That's what I'm saying. I'm reading right now, and I don't know the storyline good enough right now in the short term. And that is what, actually, that should go over there. So, yeah, that's how it's be set. Like right there, that last little 1 minute low on NQ was balancing out a 1 minute chart. Right, and now I mean, there's so much activity, but I can, there's just no way I can properly teach it all to you so fast. And so we're just gonna have to sit here and do it. Just is what it is. But yeah, I'm just kind of looking at NQ. We just balanced down to 24,085. Until ES breaks out 685,982, there can't really be too much pressure up. Unless NASDAQ is really breaking down below 2482605, it's really just a pullback to there. You know what I mean? It's you currently have the NASDAQ battling some weekly levels. You have the ES fighting under some weeklies. You have the NASDAQ fighting over monthlies. You have the ES fighting under monthlies. So again, there's a lot of arguments going on. There's a lot of different sets of liquidity and traders and strategies all overlapping right now. And we're all kind of fighting each other. And so that's what I see is going on right now. There's too many probabilities. So the market can't decide just yet. And so that's why that's what I'm reading personally. Again, there's always going to be a move. There's always going to be something, but it just looks like there's too many things going on. And I think traders and I think liquidity is getting a little confused. And when I'm confused in the sense that I don't have the confidence to really do any sort of big move one way or the other for the moment. And that's because I can see too many different probabilities, and any one of those could play out to a degree. So that's why I'm just kind of chilling for a second, looking at everything. And like I said, I'm not on the swing long anymore because the market broke down overnight, so I had to close that. So I'm kind of just like restarting right now. I know the system is bearish, right? The SMAs and everything is downsided. It's just a matter of the markets wanting to give in and arguably go down. And right now it's again, we're over that guy, and I'm looking for reasons why the market would maybe want to go down. I just don't have any for the moment. Unfilled, yeah, that's, don't want that. Okay. Doesn't need balance, but I mean, maybe. Sure, maybe. See, what I'm wondering is if we're going to drop this drop the ES back down to retest closer to lows. That's kind of a thought I've been having. Does this thing have? It does, but it doesn't have that. But when I'm looking at some of the smaller time frames of the price action that we've built so far in the day, there's no like smaller market that needs to be balanced down there. So that's why I don't really think it should be going down for the moment, because when I look down at everything that's happened so far today, there isn't any imbalances that I see that are worthy on a 1 minute or a 5 minute. That's why it looks like it's struggling to go down, right? Now, if we start to clear some of these highs on ES, then that might actually make something interesting. Again, you can see this market's still priced below 6.8, 6.854, etc. I mean, it really just looks like we're bouncing that monthly on the NASDAQ. Maybe if we're lucky and actually get a break to the upside, you'd see the NASDAQ up again towards that 24970. ES 686854, etc. We're still running into the 100 fib of today's data. Again, there's just too much confliction right now in today's market just for the moment. Let's track our 30-minute here. We still have room up to our pre-market 30-minute. That's not done yet, so again, that's still on deck, right? So just working up towards pre-market 30-minute. Remember, markets are trying to do kind of counter trend bouncing back to potential resistance points. Again, for the moment, we're just basically taking markets up, seeking out potential resistance after the 30-minute break. Let's double check our 50 SMA locations. Those are still all the way up here. So there's that. Nvidia taking the market down. Yeah, probably. I posted a YouTube short yesterday about that. Yeah, Nvidia broke down its 30-minute fib. They basically priced. Yeah, so the earnings for Nvidia, they basically priced right around the 50 SMA and the 30-minute. Took out earnings. Algo controlled it at the 30-minute 50 SMA and then dumped it. So again, this is ES backtesting at 6868. So that's another little liquidity pool area of potential. So you can kind of see how markets instantly reject that. Long story short, just a little liquidity pool area. So resistance, if you will, for the moment. again, we're just basically into the previous week's GP. That being said, I'm pretty sure we already, I'm pretty sure we already tested that at some point. Another nice little move up into 686 something. Basically, the way I see it here, one of your probabilities or scenarios is if ES breaks out 68654, then the market on the NQ would go up towards 2497007, at which point there would be an opportunity for a monthly NQ 100 liquidity pool resistance over under. Again, it's all just over under, potential little top tick resistance start, support this, support that, etc. So there's that potential. If we look at the ES has a 1 minute unfilled GP here. So it basically means it either has to close the golden pocket or it will go up to 161. So if we measure that, you will see here ES has now gone to 161 and stops right about there. So now you could see how we're using the monthly 23.6 in confluence with a 1 minute unfilled candle to project a 1 minute market extension into a monthly. Now the monthly fib here on ES is starting to break. Where did my level on NQ go? That's weird. How did that happen? I must, I see, because I deleted my trend line, which was overlapping it. I see. I'm like, I didn't do that. Remove trend line. So yeah, now NQ's kind of popping up towards that monthly at 24970. That becomes a new little over-under on a monthly. Now, arguably, I wouldn't be looking long into that because, it's kind of one of those scenarios like why I don't want to be the first one to try to break out a monthly. So arguably, as the market trades up and into there, might be slightly cautious. And if NQ ends up holding kind of some degree of hesitation as it comes into the monthly, then, a lot of times what it will be looking to do is even balance the shorter term markets. So right now in the shorter term markets, there is imbalance in the 1 minute charts. So if the monthly ends up holding any degree of resistance or temporary topping, the NQ markets may be willing to rebalance some of the smaller time frames. Which in this moment, the only thing there would even be are just 1 minutes. I don't see 5 minutes. So yeah, so there's that NQ monthly getting hit right there. Yeah, pretty much that. That makes sense. Another thing is, there's all sorts of things, to look for and think about and so on and so forth. So that's that. Yeah, so far market's kind of holding. I don't want to say markets are holding, but yeah, anyways, we've kind of cleared up into that 100 fib there on the NQ. Again, if there's any sort of degree of monthly back testing and some degree of monthly fib resistance, NQ would be willing to come down and, again, like we said, maybe fill some of the 1 minute imbalances. That would, and when I say best case scenario, it's just when you think of what may be arguably obtainable on that market, that's something, right? It's not like you're trying to be bearish on a monthly and take the market down to the next weekly, right? You're only trying to kind of fill some of those 1 minute imbalances. But anyways, the market is relatively strong in the sense that the momentum is positive. We do have some positive MACD and things like that. There's that. But and then, oh yeah, side note too, right? So you can see here too, the ES, right? So ES is now over its monthly, right? So we were bearish below, broke above, moved away. Now we've recovered. So ES is positive up on fib. We're just doing a temporary back test on NQ. Now for the longs to continue, you'd want to see NQ starting to break out there, obviously, and getting acceptance and so on and so forth. But yeah, that's pretty much that. And if the monthlies end up flipping back positive on NQ and everything stays positive, then you'd be more likely to go and get your daily levels from yesterday and so on and so forth, and or the 50 SMA up here. So that's another thought. Let's double check this. Yeah, I mean, that's quite the ugly market. Again, we are still just doing our nice choppy back and forth market for the time being. Again, so these are, as we mentioned earlier today would be a day about seeking out support on the downside, basically taking the market down for as long as it wants to go down, then seeking out liquidity support, balancing the markets, counter trend trading it up to seek back out resistance as long as it's below the 50 SMA. And if the market wants to reset the 50 SMA, that just means the markets go back to $687, right? Now, whether that be today, tomorrow, or just in general, right? That's how the market functions, right? It goes below the SMA and trades bearish until it stops, and then it either lower highs and rolls, or it's going to reset to the 50 SMA. All right, so just keep that in mind. Now, something to consider is that the ES does not really have a back test of that that monthly fib that it's transitioned, right? So basically the story would go, if NQ overshot the monthly and then ends up re-rolling, getting resistance off the monthly, we may arguably see ES roll back down to 686854. Granted, you would need momentum to kind of slow down, obviously. But yeah, there's that. Yeah, and then arguably there's still some of those, 1 minute imbalances down on the ES there. So if it came back down to the, the monthly and broke down, then we would look to fill some of the 1 minute imbalances down. So the targets of this roll, right? So basically the way this would go, having to take a little bit of profitos there. I actually got to make sure I set this up and don't get stopped out, or do get stopped out. It's proper. Sorry, doing something. All right, so that's good there. All right, so basically we're going to look to take the market down to 68654 and or down into the 1 minute, basically imbalance. But the only way that happens is NQ stays below 24970, and then obviously you'd break down the weekly. So just in general, like, we really wouldn't be looking to take the market in the micros further than that, because that's the 1 minute imbalance along with our monthly back test, but it's only capable and only doable with the NQ staying below its monthly. So if the monthly fails the breakout, re-rolls down, we'll then target ES down to here and to here. No more than that for the time being. And that's pretty much that. Stops are in place, whatever, all gravy. And so let me bring up a SPY chart on a 1 minute, right? So you can kind of see what we're doing in the real time now too. So now what I'm doing is I'm anchoring, I have VWAPs anchored to the high, and that would basically be like the trailing stop for everything, because, so there's a nice breakdown. There's our 1 minute imbalance fill. So obviously taking some Profito in today. And then also you can see too here, the NQ had a 1 minute imbalance as well, right about the same spot. So there's just some confluence, right? You can see how the 1 minute chart market was not balanced, which that 1 minute imbalance lines up with the back test of the monthly that we have not yet back tested after the breakout, while simultaneously lining up with the monthly. You see what I'm saying? So we basically ran up a monthly back test, used the NQ monthly back test to start resistance, to then pull the market on ES back to back test its breakout, which hadn't happened, which also lines up with the 1 minute imbalances that were previously created in the market as we made the breakout. So earlier when I told you that I was just trying to figure out the storyline, it's that I hadn't yet figured out a proper storyline that I felt comfortable there with, right, as it relates to Fib. And there it was, right? There I could read enough data to say that that was going to happen, right? So it's kind of one of those things that it took me a while. I don't know how it just clicked. And it's funny, too, all the years working with Brandon, and I traded different systems, and I had my moments of doing great and what, just in general, right? It's funny because, like, he's the one that put me onto a lot of these things, and for years it just didn't quite click. And then I was laying in bed literally like a week ago, and it was just like a light bulb when I was like, yeah, I see now. And I think it was just I don't know, just time, right? The way my brain learns is it has to piece like every piece of material together before then it's like, So I have like a reverse engineering style of learning, which usually means I take the longer route at times. I'm a fast learner, but I have to learn so deep that I feel like I end up almost reinventing the wheel at times just to get back, but then going through the reinvention of the wheel usually gives me a super deep understanding of things, more so than the surface level. So it's kind of like the downfall of myself, but also the superpower in a way. So yeah, now that I feel like some of the Brandon systems finally started clicking after so many years on top of my systems. Yeah, it's been quite the interesting tale, I guess you could say. So let's zoom out a little bit so we can just kind of, I know there's a lot of detail there, but let's really just kind of zoom out on the chart here. I'm going to enlarge this one, and let's just kind of think about really what that is in a simple trade, right? Or simple thought. So removing a lot of the noise and a lot of this and a lot of that, what really just happened so far in that moment, besides the 1 minute in this, and it was really just a monthly fib back test, right? So the purple, these are both monthlies, but just this purple one right here, right? So I'll just walk you through this. Oh, I don't want to do that because then I have to delete all of those. That's really annoying. Do they have a drawing tool on here? I need to get one of those drawing tools and put on the screen, but I mean, I guess I could just bring it up on the SPY. I could just do it here real quick. So we're gonna go right here. I'm not worried about making a trade right now. There'll be another trade 1,000 different times a day. So for now, I'll just do a little bit of like a teaching thing. What was I gonna do? Oh yes, the monthly. We're going to the monthly here. So this is what I'll show you how we've mapped off this monthly trade real quick. So, and that was on the NQ. Well, we use both of them. So we'll start with QQQ. All right. So we are going back to this month, the previous trading month. Now the previous trading month was green, so I chose to fib it up, right? And so when I think maybe even the title of today's video or stream was something about like a monthly breakdown. So you can see, right, that the QQQ market dropped below its previous month and its previous kind of zero. So it's a monthly break of the previous month, right? So that's really, you know, when you hear me talking of that fib and this, I mean, that's really just all it was. It's just a monthly, a previous month's candle breaking down. Now I want to make sure that I have these accurate because I know I don't because I did it pretty quick. So that's good. That one's decent. Let me just move that up like a hair. All right, so that's good. Now, as we go into, let's just bring it back down to a 5-minute or something. And I'm going to zoom out some of this. I'm going to take these off. Sorry. As you can see, I do a lot of crap on my charts every day. So now you can kind of see from this view, and actually I'm going to turn the pre-market data on real quick, extended trading hours. All right, so now you can kind of get an idea for what's been going on, right? So that would be the monthly 100 breakdown, whatever, clear, up to, reclaim, back test, up to, down, breakdown, go to, chop, whatever. And so this morning, right, what did we do in the pre-market? We broke down, sold off, and then obviously bounced for a back test, right? So in your mind, you could have just said when you were breaking down, at some point the market's going to go back and back test, right? And then once it does, maybe it stays down like that. Who knows? Now, so for that, So for that back test, that's really just what that was. We were just looking at the back test back to that area. And then as we got there, the initial knee-jerk reaction would be, instead of running the market up to a monthly level and then breaking out the monthly level and continuing, what is the likelihood that it pauses, has a pullback, or at least pauses for a second, pulls back, or at least just chills for a second before breaking out? It's very, very common. It's very likely. Not always perfect, but anyways. So that's that. All right. Now on top of that, since we started to break down a little bit, just a slight breakdown of our previous month's trading action, that's when I decide that it now makes sense to look at the previous month's trading action. Because if we're no longer within inside of this Fibonacci structure, we must be entering the previous month's Fibonacci structure. Right? So that's where I would take this fib, all right, and go from this high to this low because it is green. All right, I'm going to do it just like that. Now I'm going to change this one to purple. Set all colors to purple. Okay. Yeah, that's fine. Yeah, maybe I'll do blue. It's probably a little easier for you guys to see. We'll do blue. All right. So now you will see how we pretty much... Oh, sorry, apologies. Let me zoom in a little bit more. All right. So, you know, and actually, I think it was on the ES. Hold on, let me do something else. SPY, or it could have been, it might have been the weekly. My apologies. Actually, it's the weekly. Like I said, I'm trying to redo all this on one chart versus I already have it all set up. It's not the monthly I want to do. I want to do the weekly with you guys. So I'm going to go to the weekly here. So, sorry. We have the monthly, and now we're going into the weekly. So here's your weekly. And I will change this again to purple. Oh, it's already blue. Perfect. There we go. All right. All right, so this is what I was getting at is, at the same time we're breaking down your monthly fibs, right? We're basically still trading back down into some weekly supports, right? So kind of like weekly support. And there were some other ones there too, right? So that's break down, back test, weekly support, bounce back to, retest, monthly breakdown. If monthly breakdown's legit, then monthly breakdown stays down, right? Etc. We would then maybe look up to here, right? If we're you get the point. It's all just market structure and so on and so forth. But that being said, yeah, we're not really long bias going into that high because obviously it's a monthly QQQ breakdown and a back test, but that's also from the pre-market. So, but anyways, yeah. So that's pretty much that. Have a good one, Sam. So as the market comes into that, so now I'm going to take this down and we will go back to these four. All right, so as we do that monthly breakdown and that monthly back test just a few minutes ago, right? We did that a few minutes ago. As we're coming into monthly resistance, I then go, if it's not going to break out right away and it will in fact pull back, whether it turns into a big pullback or whether it's just a small one, right? Let's first think just a small one. Let's think risk before big reward, right? So let's think risk. Let's say it's going to be resistance, but not good resistance. What does that mean? Maybe it goes into it, maybe it has a small pullback and kind of chills, and then it breaks out, right? That would be a loss, right? So if we short into the monthly and we're looking for a huge drop, but there's really no resistance to be found, then our profit target is obviously never going to get hit. And if we go based off of that really far profit target and say we set up a 1 to 2, we're always going to lose. You're always going to stop out in a sense, unless the trade works fully to its fullest potential. So what I'm getting at here is if you were basically, let's say you want to be bearish off the monthly and target down to 24826. All right. We'll say it doesn't go, and how many points is that? It doesn't even matter. I'm just getting, if there's not enough resistance to be found and you go for a really big target to the downside, then you may not hit your target. And if you don't take any profit, then you may end up getting stopped out, because if the weekly or the monthly or whatever does end up breaking out, then it may transition higher, so on and so forth. So as long as there is at least a small reaction there, you can get a scalp, take profit, move, stop, and adjust. So whenever we're coming into a monthly, whenever we're coming into a daily, whenever we're coming into a weekly, whenever we're coming into a larger time frame fib level, basically we can look for reaction. And we would hope that the reaction leads to a huge trade. That is definitely not going to be the case a lot of times. A lot of times it will have a good reaction, a good move, an okay one, sometimes a big one. And so the probability that you can be profitable at a larger time frame fib by first going for a shorter time frame scalp is far more likely. So as NQ today came up into the monthly fib, figure could probably have a little resistance. Now, you can see that it kind of overshoots it a little bit. That's fine. All right. At the same time NQ is overshooting the monthly, you can see that ES is currently breaking out its monthly, right? So, like, you can even see this kind of like wonky looking, I don't even know if you want to call it like a whatever, just, I was going to say like a flag pattern almost, kind of. It kind of looks like one in a way. Like, if you drew your own like flag here, it kind of looks like one, but obviously not. Like, that would be like kind of like a flag. But then obviously the scam drop there and take everyone out. But anyways, you get the point. So what do we have? We have ES breaking out the monthly, right? So ES's breakout of the monthly is really what, in a way, we really just use the liquidity of the ES monthly breakout to then drive the NASDAQ higher into its monthly. It finds some resistance, helps us create a pullback on the ES to back test its most recent breakout and also fill some 1 minute unfilled markets, imbalances. So as I was saying, it's not that this trade
won't turn into something, a bigger sell-off or a bigger short. It's just in that moment, what is something highly probable that will take place that you can make money on, or try to some degree, where we're not looking for something that's so far down that it's not going to hit. And, we're not looking for so much that even after a move down, we could still get taken out. So that's pretty much that, right? So we just used longer time frame fibs to create temporary resistance in the market to then back test certain imbalances in the market that were placed on the micro time frame. So, I would be less likely to have been bearish on that monthly level if the market was entirely efficient going into, right? An efficient market would be one where every single candle is balanced on the way up, in an uptrend and in a downtrend. What I mean by that is, if you look back on the past couple days, or was it this day? So if I go to the 30-minute, all right? So like right here, all of this here, all of these candles, that's balance, right? That's all balance, because the market is going up, pulling back, retracing, going up, pulling back, retracing, etc. This is obviously not balanced, right? All of this not balanced, right? That's all just not balanced, right? Because each candle does not retrace the golden pocket, right? So that would tell me that, you have this candle here that's not balanced, right? So that means at some point in the future, we have probability, right? And reasons why we're going to want to go back there. And so I'm just going to map that right there. And now if I take a fib and I fib this candle, right, from high to low, right, and I can see the 61.8 golden pocket has not been retested. So that gives us liquidity reasons why we're going to want to go back to that point, okay? So now, oh, wait, why was I saying that? Efficiency, oh, yes, now I remember. So what I was saying was I would have been less likely to short the top of that move if the market was completely in balance going to it. But it wasn't. There were imbalances left on the micro time frames just below the larger time frame, which then gave me the conviction that we're going to create at least enough resistance here to at least pull back and balance the micro time frame, which then puts me in a high conviction short-term setup. The high conviction short-term setup may turn into a bigger short if the market and those that really control the game want to. So those that are really functioning markets on longer term levels with far more liquidity, far more capital, far more control, probably far more experience, and far more skills, are still maintaining that monthly bearishness there. Right, so I was trying to find how can I involve myself in the market in a way that I feel comfortable. And that was it for me, was using the monthly as resistance and retracing micro imbalances that were just recently left within the markets. I hope that makes sense. Yeah. So like I said before, it was taking me a second to kind of get in lockstep with the market. Sometimes it can, like I said, there's just so many, and again, I'm by no means even like up to close to Brandon's level with Fibonacci by any measure. So I can only imagine over the years, what might change as far as how I view things. But like I said, like setting up my chart, like I'm still kind of in that phase of having to really grasp my workflow and how I want to read the storyline. See, I'm very good at reading volatility markets and the regime change in the S&P 500 and understanding that the news cycle, how it's going to flip, when it's going to flip. Now that I'm finally starting to pick up on Brandon's materials, I'm better understanding the liquidity transfers.
and so on and so forth. But the workflow is where I'm still kind of lacking. I don't yet understand the best way for me as myself to function on a day-to-day basis. Now with all this new information I've given myself and how I'm trying to set it up the way I like, it's a lot of information for me to take in, right? I got to a point where the volatility systems, that's done. I don't need to, I can review that and I can, get more detailed, but that one's done. I know that through and throughout, right? I don't need to sit late nights and review that. I know that through and through. And I know my workflow for that. My workflow is very consistent when it comes to the volatility index. I can wake up every single day, boom, 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 okay, done, right? Kind of thing. Now it's how do I layer on all these different fib tactics on top of my systems, even more so. And that's where I'm starting to try to process how I want to overlay my charts. And so you're kind of seeing me in sort of that learning phase of how I'm setting up my charts and how I want to manage my workflow with it. So there will be a slight learning curve there, I'm sure. But it's like I said, it's happening fast though, because like I said, once you kind of know the regime changes. So like that's what I mean is, since the S&P 500 is negative, it's not that it can't go up. You know what I mean? It's just when we see that the market transitioned bearish here. So like remember, right? This is the 50 SMA, so it's positive, right? So this is so the market was positive, and then it couldn't hold support, and then it broke down. So if the market's breaking down here, we're going to be more optimistic to look for liquidity transfer down, right? And those are just those kind of specific areas we may be trying to transfer that liquidity or steal liquidity from, right? So it's just kind of finally layering that on top of the system. And there's other supports that I use and targets outside of just fib that I'll be using as well. But you guys get the point. Fun stuff. Anyways, have a great weekend, Sam. Cheers. I wonder if YouTube, well, I mean, maybe not. So yeah, anyways, cheers. I appreciate you guys tuning in and hanging out today. I'm glad to be back. Good news, we passed our we passed our newest electrical inspection at a rental property, so that's good. They issued us our certificate of occupancy, so my friendly, oh-so-helping government said, Connor, we give you permission to go make money, you slave. Said, thanks, boss. Appreciate it. Couldn't have done it without you. Could not have done it without you. So, So we're at this moment in time where we're just basically trying to think about what might be the next move. Darling, can I do this on a double? Oh, cheap. I don't want to pay for it. I don't need it. I already have enough charts. So, yeah, basically the story would be, let me close this down and go back here. All right, so basically the story is right now we have broken out ES at 68654. So that's going to be support over under on the monthly. And we are now moving up back into the weekly. So the long target for NQ is back. So you might see some temporary resistance on ES as we run into the weekly target here on NQ. So as a result, anyone buying that high would be likely to get pulled back into. The market has also left 1 minute imbalances here, so they may very well use the NASDAQ long temporarily top the market. We'll see. Again, I'm not saying you should use 1 minute imbalances and you just always think the market's going to pull back into them. You have to, again, it's not about using a 1 minute imbalance to effectively predict where the market's going to go. It's a probability. Now, we probably know the market could go down and fill that 1 minute imbalance on ES there here at 68736. Granted, we also know that in the micro, look at the NASDAQ, it's over its monthly. So for this micro fill to take place, you need algorithms and programs at the monthly to be willing to drop out, like you're seeing there. So once they drop out, that's where this candle is more likely to go down to that level. Now you can also see we just had a 1 minute NQ imbalance here that it's filled. So there's the fill, right? So that's how, again, you can see that we're creating the resistance. It's around the monthly fib, you know. So again, or sorry, is that the month? Yeah, hold on. Did I just delete my weekly? I did. How did I do that again? That's cray. Oh no, I'm looking at. Oh, sorry, I was looking at a different one. My bad. So yeah, like I said, I'm still learning my workflow. Not used to using this setup yet. But even for not being used to using this setup, I'm doing pretty damn well. That's the funny part. So yeah. Anyways, we're finding that slight resistance off the weekly. Excuse me. So bottom left, you see how we've top ticked the weekly here. That's weekly resistance. We are using the monthly as an over under, right? So we're currently breaking out NQ monthly. When I say breaking out, we're just price going over. So price is going over the monthly on NQ, but we're using the weekly to top it. And we just left a 1 minute imbalance on ES that we just filled. So that's how you can see how the market might set up a scenario, like a pullback, like a micro pullback scenario by leaving a liquidity grab on the downside on a 1 minute while using a longer time frame weekly to temporarily slow the market down and then use that 1 minute liquidity grab like you just saw there. So like I said, I'll probably get quicker at this, but it's like I said, it's funny that it took me so long. Even with all the years of working with Brandon, just so long for it to click. But like I said, it's just one of those things. So like I said, it's just it's about reading the storyline and finding the narrative and watching how everyone is participating in the market, and understanding how breadcrumbs are left in the micro. It's really like that. It's basically you go from your larger time frames, and if there's breadcrumbs that are left in the shorter term time frames, we will work the markets towards those levels, as long as the larger time frames are in confluence to that direction, if you will. So, for example, let's talk about this, right? So look at this 1 minute chart. We can see on this 1 minute there's imbalance all the way down here, right? Now, does that mean the market's going to roll over and go get it right now? Not necessarily. And why wouldn't we think that? Because if we think about it, right, is the market bearish below this monthly, or is it bullish above the monthly? It's bullish. So we're not going to look to go short this market going for that 1 minute imbalance, knowing that the monthly is going the complete opposite of that, right? So you would need to be so you'd be shorting the market, trying to go for a 1 minute micro imbalance, right? So think about that. You'd be doing a 1 minute short strategy against a monthly long bet, right? So is your bet on a monthly, or is your 1 minute micro bet stronger than the 1 month long pressure? If so, go short. Now, if you don't think that your little micro bet is going to beat the pressure of a monthly transition, don't short it. So that's what I was saying about reading the storyline and understanding who's playing, what players are in the game, what they're doing, and how you may or may not want to interact with that. And so for me, like we said when I got online today, it is the S&P 500 is negative. It is bearish, all right, because it's below trend. So what are we going to do? We're going to look to trade the markets down for as low as they will go.
until they find oversold support. We grab liquidity on the downside, eventually find support, and then we look to rally the market up in the downtrend. And that rally can go as far as the 50 SMA, which is priced all the way up at, well, in this case, 6,894. That's a target, right? That's not a fib target. That's a trend relationship target, okay? We will cycle Fibonacci as we reset trend market, right? So that's what I'm better understanding now, is that we basically will just structure markets how we best see fit for liquidity sweep within specific trend. Right now it's a negative trend, but we're oversold bouncing. So we're basically resetting all of the imbalances that happened since the start of the downtrend for the moment. We know that the start of the downtrend for the SPY, sorry, let me bring this back up. All right, we know the start of the downtrend for the SPY started here. When I say downtrend, right, someone's going to look at that and be like, oh, that thing's hardly downtrending. And it's like, well, yeah, because it depends on what you're considering a downtrend. If you're considering a downtrend that's perfect and goes down every single time, then yeah, you're going to think this doesn't work. Now, if you're someone who, you know, takes a second to realize that the markets function in the short term, then you will see that as a downtrend, right? So we overnight have broken down, and you can, I mean, it's clear as day, right? There's your snap, cannot hold down, breakdown, right? Now that breakdown is so far counter trend bouncing, right? And as long as it does not reclaim here, we can still see the trends of the market stay down, okay? So what we're doing effectively is just, and let me enlarge this chart here. We're effectively just, I said, resetting the markets and imbalances and whatever. Let me just do it like this. Okay, so that level is pretty much, I think that's where, was it there? No, I was right about there, give or take. I don't have the level set up on this here, but yeah, long story short, for this spiel is that, yeah, the SPY and what have you and ES, they're below that 50 SMA. So as we counter trend bounce the market back up to retest trend, right? So this is SMA trend, right? Where I'm pointing to, that is SMA trend, right? Back test SMA trend. In the meantime, right, we are breaking down the monthly, back testing the monthly, holding the trend down. Now we're resetting it back up. We broke over the monthly. We held the monthly. We're breaking back up the monthly, but still below the 30-minute bearish market maker structure. Okay? It's a lot to take in. You're not supposed to know all of that. So, what's the narrative, guys? The market is still bearish because it has not reclaimed its 50 simple moving average. So that's another way how retail traders get smoked. They see a market sell off and they go, dip buy opportunity. And then they start buying stuff up. And then it hits the 30-minute to a degree. And then the market stays bearish. And then they get cooked. And then they go, the market's a scam. Which it kind of is to a degree. So, yeah, that being said, what time is it? 10? Oh my gosh, it's almost already 11? Boy, oh boy. Chips ahoy. Yeah, anyways, I don't know if the
Nah, hold on one second. Where is it? Where are you? Yeah, so anyways, I'm hoping you guys are going to have a great weekend. I got a couple things to do. I got to go to Home Depot and get some fittings for a gas line. And then I got to do some packing. And then I'll be snowboarding in the Big Sky, Montana soon. And then we will be back in about a week. About a week ago. And then I'm going to be in Florida. Probably, maybe I'll be doing some streaming there. And then I will be back home. And then I will be in Arizona. And then I'll be back home in April, back streaming. And then sometime in April, I'll have to go to North Carolina. And then I'll be back streaming. What's after April? May. Then I'll be away in June. And then I'll be away in July. And I think I have to go away in May. So anyways, there's a lot of things going on, and I will keep you guys updated on those travels, and so that you get, well, I mean, I just won't be on streaming, that's fine, but yeah, busy stuff, a lot of stuff going on. But like I said, this next month, when I'm in Arizona, I'll probably be streaming to some degree. It'll probably be a watered down stream. I just won't be as good at analyzing things as quickly because I just won't have my full setup. But in Arizona, I'll probably be on, but we're definitely going to be a little spotty on the streaming coming up for March because I'll pretty much be gone I pretty much won't be home for March. I'll be traveling and gone and out of town most of that month. So it'll be a little tricky on the streaming side of things. But I will do my best to be on. Okay, so as the market comes down into the monthly, we might be able to see, I'm debating, I was going to say it depends whether or not the markets are willing to let the market drop out right away here. If not, then the market should go through a counter long push on the 1 minute. It's a little sketchy looking. So it's kind of one of those things where if you're following the market right now, you might want to be cautious about trying to sell this low to get it to break down. Not that it obviously can't do that. You are coming back into what am I doing? Come on, brain, function. Really? I guess so. Huh. Yeah, you're coming back down into that, again, this ES monthly fib. So it's like I just wouldn't be the one trying to break that fib down right away. Now, obviously it could, but you may not want to be the one arguably trying to short directly into that low, and so on and so forth. Now, that being said, the NQ has now given up, or it's back below its monthly fib level, right? So the monthly is obviously down on NQ. We're still positive the monthly on ES. So until ES gives up its monthly, we shouldn't really see the markets like shelf dive or break down a whole lot more in the micro. Remember, the markets can always do whatever they want. Now, as the market on the ES trades down into its monthly, we are on a negative momentum push. All right, obviously, markets are going down, momentum is bearish. There is no positive momentum that's clear as markets come into this level. So if one wanted to use it as support, we do not currently have confirming momentum to dip by that. Therefore, little more likely the level slices and dices. What is next? Yeah, that's that. That's the 100 for that guy. Cool. So below that opens room. We did have. Sorry, let me just look at something here. I'm wondering. Yep, so, well, there we go. There's a bounce off the monthly. All right, well, so that's a perfect example where even with me reading some momentum, like it's negative momentum, look at that long pop. So again, that's where, like I said, momentum is kind of a tricky thing to use at times because it's not right all the time. It can give some degree of edge, but anyways, there's the counter long press back. Now, this is where you got to be somewhat cautious, right? Because you're back testing the NASDAQ monthly. So if the NASDAQ monthly is meant to stay bearish, this is arguably where a lower high on the NASDAQ monthly commences and then tries to roll down a little bit. Now, obviously, markets can always do as they please, but you get the point. So far, NASDAQ monthly not really holding too much resistance there, kind of just reclaiming, so on and so forth. Pretty straightforward. Yeah, so out of curiosity, does anybody enjoy the stream? Does it make sense? Are you guys having funsies? Yeah. I guess the question is when I cover topics on stream or go over these little trades, like I guess really the question is do I explain it in a way that it actually makes sense to you? Are you seeing the confluence? Are you understanding the market, or is it you're hopping in the stream and you're confused? So I know there's only 6 of you, but some feedback would be appreciated. Thanks, Steph. I appreciate it. Yeah, I'll keep posting those YouTube shorts and little mini lessons. Yeah, so like even like this 5-minute market here on the ES inbalance up to pretty much wherever. half to there, so a good chance that market goes up, fills that 5-minute imbalance. Again, I would expect ES is going to kind of keep moving itself upwards a little bit here. Again, try to fill up that imbalance. Now this 5-minute market has an imbalance, so it either has to fill it right away or the market will try to move up to 161. So the way that ES is setting up now in the 5-minute is that it pretty much has two options, which is either so you can see how we have these two imbalances right on the 5-minute, right? One here, and now there's one here. So it's got two options. Well, one of which either go up and fill this guy, right? Which I think it's going to do. But let's forget the one on the upside, right? Think about the one on the downside. So its options are, the universe and Fibonacci and math, it works pretty much like so. Either the market is going to rebalance itself efficiently down to 61.8. And if it does not efficiently balance itself to 61.8, it will then efficiently balance itself out to 161. Volume, energy, it all has to be balanced. And you can do it in two ways. In the form of coming back and in the form of going forward. Markets aren't perfect systems, but if you consider that's how the market works, with the understanding there will be a degree of variance and randomness and, fear, greed, and emotion entangled into that probability, then you'll have a pretty good understanding of Fibonacci at that point. It basically ties into the laws of physics and whatnot, and was that thermodynamics, which basically suggests that all energy that exists here and now cannot be destroyed. It can only be transferred. And all the energy that is here and now has been created, and any energy in the future that's there is no, everything that exists here and now and all energy, can't be created nor destroyed in that sense. So when you apply that sort of thinking to the markets, it would then become the energy of the market is all of the money that goes in and out, whether buy or sell. And all of that energy coming into the market has to be efficiently distributed one way or the other, whether that be up or whether that be down. And the Fibonacci sequence gives you a mathematical structure and map and outline of the efficient way of balancing that energy when it's put into the market. And now all the money and all of that energy that we're talking about coming into the market, remember, that energy comes from the form of essentially digital dollars, right? So digital dollars are going into your brokerage accounts, and then those digital dollars are being used to either buy stocks, futures, and whatever. Now, in order for those dollars to be, converted into futures, equity, or whatnot, bonds, you first had to get dollars. So the only way you got those dollars is probably through the form of working, unless you were lucky and you woke up and stumbled across a bag of millions of dollars and you didn't have to work for it. So in order for that energy and dollars to be put forth into the market, you first had to go expend your energy in some fashion or another to attain the dollars. And then the dollars that you attained had to be created using somebody's energy at the Federal Reserve. Well, now it takes no energy. Just click a button, trillions. But back in the day, someone had to go to work to the printing press and they had to print dollars, right? Right? And so they had to use their energy to do it, right? Granted, how did they even get their energy? From the universe, from when they were born, right? So it goes back that all energy is here and now, can't be destroyed nor created in that sense, right? Even if someone goes, oh, well, I create a bunch of energy for the world through solar power. No, you didn't. That was the sun putting off energy that is here and now, and right? And your solar panels are collecting what's already existed, and it's just redistributing the energy in the most efficient way possible next, which would then be to your homes, right? Or to a building, right? And then now your lights are on. And now that your lights are on, you can cook at night, and you can clean at night, and you can do all of these things, right? And so now that your lights are on at night, you can sleep more cozy, you're more well rested, right? And now you have a better chance of working harder the next day. And now, so again, it's all a transfer one way or another, and how far you want to take that back you can do. So now you can kind of get an idea for how my brain works, and probably why it took so long for me to piece a lot of these things together the way I do. And that's because I have to really, my brain doesn't really grasp things without true deep study and deep learning, unfortunately. But then again, it becomes a benefit in the end. So that's what we're doing pretty much every day. We're just taking money in the market, and we're redistributing price in the most efficient way that we see fit, based off of the storylines that we see, right? Or how the market has come to be, right? And if you start looking back far enough, you can kind of create the storyline, which is, again, you know, when someone creates a solar panel, they're really getting the energy from the sun. And then once the solar panels get the energy, well, the energy has to go somewhere. Well, where is it going to go? It might get stored in a battery first. It might get redistributed to someone's house. It might get redistributed to someone's building. Now, with that energy going there, what's going to be the output of that? Now, where's that going to go, right? So if someone is now using the energy to charge their car, then I can predict that they're probably going to use their car to drive somewhere. So that solar power sun then goes to a plant that then goes to a car inside someone's house, which then makes it capable for the human in the house to get in the car to now go here. So it's all just a form of transfer and redistribution at the end of the day from basically the fabrics of the universe. And now all that's really doing is finding its way into the stock market. And now that energy has found its way into the stock market, and it's creating inefficiencies because people are fearful, greedy, and their psychology. And so now we're taking energy from basically a perfect universe and throwing it into an imperfect universe, the stock market, which has dealt with fear, greed, anxiety, and all these psychological things, which have zero rationale many times. And then we're trying to figure out a way, how do we properly distribute all of this emotion and all of this chaos to make it make sense? And that's what we're doing. And it took me just the damn longest time to finally piece all that information together the way that my brain sees it and understands it. And now I think I do, but we'll see. We got to stay humble. The market is a very humbling place. So though a light bulb is clicked on, we can't just assume we're going to win every single thing and know every single thing. But yeah, you get the point. So that's what we're doing. Alrighty, well, we are down to 4 people watching. It would appear that the YouTube algorithm is maybe struggling to find the population group that enjoys this information, but we will give it time. We will follow the path. There is nothing wrong with being patient to reaching the minds of individuals. But for those of you that are here, I appreciate you. Thank you guys for hanging out. I enjoy doing this. I enjoy talking, as you can see. This is the only time I get to... That's not true. I don't want to say that and sound doom and gloom. But oh, by the way, we're getting a lot of signals here, actually. We have a lot of golden pockets untested, so that tells me that the market could be setting up something. We're starting to transfer a lot of impulse and energy in one direction right now. So it's starting to make me question, why is there all of a sudden such an increase in impulsive emotion in this direction? So maybe we might be looking for a breakdown, maybe some degree of continuation, maybe something. It's not a guarantee. Remember, these are micro time frames, but the micro time frame might be trying to send us some signals if we're willing and patient enough to pay attention. So we got a lot of signaling there on the NQ. We get, or what are we seeing here? We got, come on chart, stop being lame. We do got some signaling here from the SPY. Not as much though, but enough to make me concerned about that move slightly. Gotta check some other stuff here. Check a 5 minute. I don't want to jump the gun. We are over the monthly. The monthly's back tested. Yes. There is a 1 minute imbalance down here. What about this guy? It's only a 1 minute. There is a 1 minute imbalance down there. What about the 5 minute though? So the 5 minute has no imbalance, so it's not like we're trying to get a 5 minute. 5 minutes got no imbalance. If we are going to put in a lower high though, it's got to at least maintain below the 1 minute top down volume weighted average price. To a degree, not necessarily perfectly. So I'm going to be watching this a little bearish in this area, the market. And, you know, I would say maybe if we are going to get even a degree of a rollover, we might be targeting the 1 minute imbalance, arguably back to the monthly here. It's slightly skeptical. It's not the greatest scenario down. I would like bigger imbalances, but that's okay. We do have 1, 2, 3. There was almost 4. So if we fib this guy, so we're going to do a couple things here. We need to track the top one. So that one's already completed the 423, 361, which is why we're helping do this little 1 minute bounce. So we're doing a 361 1 minute, and that's creating the bounce. This one's already done the 423, which helps the bounce. This one would be outside of. This one's going to be outside the 423 or just down into. Got it. So we have arguably completed the extensions of these impulsive candles, which should help us bounce a little bit here. Yeah, it's not the greatest. And if we do end up bouncing a bit, we should basically just shoot right up into where I'm drawing. Yep, right to the 1 minute VWAPs. And so, like I said, maybe it's not the greatest setup. And so we're just jumping right back up into VWAP. Yeah, scammed. That's funny. Because like I said, if you don't break, you're just going right back to the VWAP. So that's pretty, I mean, it's fine. It's not a big deal. Same thing here. We got now you got a 5 minute imbalance. So pretty much market has one option here. You either got one option. You got to come back into that 61.8, or the market's going to have to kind of start taking that energy up to the 5 minute 1618. Bitcoin, not really doing a whole lot here. But anyways, I think we'll end the stream here for the day. Anyways, happy Friday to all of you guys. Hope you guys have a great weekend. Like I said, won't be on all next week. So you guys have a good one, and I will catch you back at some point in the future.